Hey guys, Joseph Henson here with Henson CPA Group. I hope you guys have had a great day, a great week, and you get some time this evening to relax. This week, we're going to jump right in and we're talking about the cost of doing it yourself when it comes to accounting. Again, I'm Joseph Henson, CPA, Henson CPA Group. If you ever want to get a hold of me, my link is down below that you can book a call directly with me. But let's go ahead and get started. Do-it-yourself or DIY accounting usually starts with really good intentions. Most owners start DIY accounting because they want to save money, stay involved, keep things simple. Most businesses eventually do outgrow this system, though. I am always about if you have the competence to do it yourself and it doesn't take away from your ability to spend time with your family, to service patients, to do what you need to do, it's an okay thing to start, especially early on when you might not have the capital to pay for an outsourced accountant, an outsourced CFO. The cost usually isn't going to be obvious at first over what this truly does cost you, though. The problem with DIY accounting is the problems will build slowly. They will usually look like delayed reporting. I can't get this to right now, I'll do it later. Small inaccuracies. You're doing everything. You don't need to recheck what you're doing. This is fine. Unclear numbers. I don't know what this means. There's no breakdown between salaries, there's no breakdown between different costs of goods, or missed financial trends. Month over month, we look like we have income coming in, but we don't have good cash flow. The cost is often less about one big error and more about ongoing financial blind spots. Delayed financial visibility creates reactive decisions. When your reporting is delayed, decisions become reactive. They're not proactive, they are reactive. They're happening after you've already made the mistakes. Cash flow gets harder to predict. If you're only doing your financials every 3, 4, 5, 6, 12 months, it is extremely hard to predict what your cash flow looks like for the next 30, 60, or 90 days. The issues get noticed later. I didn't realize that this was happening because I just don't have time to do this. And then planning becomes more difficult. Is it time to expand? Is it time to get new equipment? Is it time to look for a bigger location? It's really hard to make those calls if you're just doing this periodically. Often, the owners don't fully trust the numbers until weeks or months later. That makes strategic decision making much harder. If you don't know what's actually happening until months later, you've already lost out on a lot of time to do what needs to be done within your clinic. DIY systems often break during growth. Growth creates complexity. A system that worked with one doctor, a small team, or simpler operations will not work as the clinic grows. If you are adding multiple doctors, if you're expanding your service offering, it's going to be more difficult, and the growth tends to expose weaknesses in financial systems. If you are a single doctor clinic used to doing it yourself, this is where you will notice things start to derail. Tax problems often start with bad bookkeeping. If your books are not good, if they are inaccurate, you might find that you have tax surprises. You have payroll issues. You have reporting inconsistencies. You're not reporting all the income. You're not reporting all the expenses. You're reporting too many expenses. And then you come down to compliance problems. A lot of tax issues actually start upstream with bookkeeping problems that were never caught early. If you are only looking at this once a year because I have money in the bank, I can't deal with it right now, and you wait until tax time, you're going to notice you have a lot more issues creeping up. You might not have been making the appropriate payroll tax payments. You might not have been able to save as much on taxes because you didn't realize what your income was. Sorry about that, my microphone cut out. But it's really hard sometimes to know where the issues are coming from if you are behind. Owners start spending time in the wrong place. With DIY accounting, this often pulls owners away from the leadership of the clinic, the operational side, the growth, the patient care. You got into being a veterinarian because of the fact you wanted to service patience. You don't want to have to worry about the numbers day in and day out. You want to know you have money there, how much, how long you have, what can be paid, what you need to start looking at to grow. You don't want to have to worry about spending hours fixing reports, reconciling the accounts, if you even reconcile, cleaning up transactions, and trying to figure out software issues. Just because you can do something doesn't mean it's the best use of your time. Financial clarity impacts confidence. Unclear numbers will create uncertainty, hesitation, stress, slower decision making. Even within a profitable clinic, it can feel financially stressful when visibility is weak. Hiring, expansion, and major decisions start all feeling riskier. You don't feel confident enough to actually get in front of the growth problems you're having, or you'd feel so overwhelmed with a lack of clarity you have decision paralysis. Do I hire? Do I work more? Do I work less? Can I get a vet tech in? Can I expand? Can I get a new x-ray machine? Can I get a new ultrasound machine? Without visibility, you have no clarity. You have no confidence. It becomes extremely risky and scary to try to grow. Good accounting should support better decisions. With strong financial systems, the owners will see that they can plan ahead, understand the trends of what is happening within their own business, improve the visibility, allowing for better decision making, because you will have the confidence to be able to do that. Accounting shouldn't exist just for taxes. The goal is usable financial clarity. If you are only doing accounting because you have to file your taxes to pay the IRS, you are not doing enough. That is not what accounting is for. Accounting is for you. Accounting is for your clinic. Accounting is for the future you've always wanted to build, but haven't truly felt like you could. Most owners realize too late. Many owners eventually realize we outgrew our systems. This usually happens once reporting becomes unreliable, once the tax season becomes stressful, once cash flow feels unpredictable. The business starts feeling reactive. When your reporting becomes unreliable, you say, I don't know if I can trust X. If tax season is when you're working on this, it's I'm working 50, 60 hours a week at the clinic, and now I'm going home and trying to spend another 100 plus hours over the next 2 weeks getting ready to find out I owe $50,000 in taxes. The cash flow will then be impacted because it's not predictable. If you're only doing this periodically, you have no clear picture of what your cash looks like. And you're always reacting to the situation at hand, not to what you truly want to be focusing on. The goal isn't just clean books. The goal is clarity, visibility, strategy, and confidence. These are the biggest things that you want to gain. And the strongest businesses will usually have organized reporting, proactive planning. This is financial, tax, retirement, everything. Financial visibility and systems that support growth. If you have historically only done this as a single doctor clinic, and now you're all of a sudden seeing 20% growth, but you hired another doctor for $100,000 a year, we need to know, is that doctor paying for himself or herself? Is the growth sustainable? How much did I lose? And how long will that last? Clean books are important, but financial clarity is what actually drives better decisions within clinics. Financial strategy review. If your clinic has outgrown its current financial systems, or you're not fully confident in the numbers, these are conversations worth having and worth having today. We do offer a financial strategy review call where we will walk through your reporting clarity, your bookkeeping systems, the financial visibility, and areas where business may be operating reactively because you just don't know what's coming up. The call, like I said earlier, the link is below. You can reach out there. You can email me at joseph@hensoncpagroup.com. Happy to talk to you guys about this. It's something we do often. But until next time, though, I hope you had a good experience with this. If you have any questions, feel free to reach out. Thank you and have a great rest of your